this is my order of preference. I will go for stocks with steady dividend yield. I still can find stocks that actually give me steady dividend yield. Okay, that will be my first stock idea or way to actually get stock idea. Then second is recovery story. Yeah. Okay, is there any stocks that were like badly battled during the COVID, and there's a good chance for them to go back to pre-COVID days. Okay, that's my second one. And the third one is growth business with strong cash position. Okay, for steady dividend yield, obviously the REITs will have very significant position. Okay, the REITs were very significant position. Now, okay, if you can recall my lesson last month, I only go for REITs with at least 6% dividend yield, or at least my preference. My preference is go for REITs with 6% dividend yield. Of course, I focus a lot on the property itself. So these are the properties I'm okay with it, and they are giving. If you can recall, QAF was also in my watch list last month, so it wasn't selected. I will still put in for stocks, for companies. Okay, for stocks, anything above 4% to me is actually quite interesting. Okay, so for REITs, I'll go for at least 6%. Okay, for stocks, if I'm going for dividend, I want something that's more than 4%. And these are the two that stand out for me right now. QAF. Okay, once again, QAF is actually into food company. You're talking about I can't remember, is it Gardenia or Sunshine? Maybe someone can help me. Is it Gardenia or Sunshine? QAF always mix up. QAF, Gardenia. Thank you so much. So it's a very stable company, give 5.2. Hong Leong Finance, okay, giving 5.6%. So if you actually check Hong Leong Finance, the PB I think is below 0.7. So again, to me, it's actually quite interesting. And they have been giving very steady dividends. Okay, if not, okay, next, recovery story. So of course, like I said, undervalue may not be so easy to find. There are actually some stocks with recovery story. These are the stocks I sort of actually come across them. Yang Zijiang is actually having a huge order. So of course, at this juncture, maybe I'll share with you how I actually pick up all this information. Yang Zijiang start 2021 on a strong footing and secures US 1.3 billion new orders for 29. If you actually look at it, very interesting. They have quite a number of share buyback. Okay, share buyback, long story short, is actually quite positive for the company. It's actually quite positive for the company. So you can see, and you can see that in December as well, they actually have secure new orders. 21st December, again, another new orders. Seems like they have been getting quite a bit of orders. So you can see November, so on and so forth. Okay, Genting is the recovery of tourism. Obviously, during COVID period, they are very affected. In fact, now they still are. Okay, but this is slowly recovering. People are going back. Casino is slightly open. If you actually can call this, of course, you have the lockdown, the casino is closed. Then that one, don't you say, sure lose money. Okay, then after the lockdown, there's one period whereby it's very restricted open. Only members can go in. So even during that period whereby only members that go in, they actually turn profitable already. That is what I can recall. Okay, so obviously, I think given that now tourism is still not back, they have still a lot of rooms for recovery. That's how Genting was actually being selected. Okay, Singapore ONG, why I actually put into this company, also because I have been monitoring this company. Last year, is it last year or the year before, they have quite some bad news. Basically, they have a bad investment. At the same time, they have to change a CEO. But things seems to be actually better now. Okay, maybe I just want to share how I pick up. I like the business. Basically, is into women healthcare. They actually go into things like, for example, healthcare service for women, female productive system, pregnancy care and delivery, gynecological and breast cancer. So I think it's a business which is at least sustainable. Okay, there's always a need. If you actually look at the income statement, net income after tax, it was actually making a loss in 2019. So I can't really show you. In any case, they have a loss because of accounting adjustment. Okay, they had to actually record impairment last year. So this year, okay, my point here is this: they have been operating wise, they have been generating revenue, they have been generating very decent profits. Okay, it has been happening. So last year, they actually have to record accounting loss. That means cash wise, it's not affected. Okay, but it's just more accounting. Their business is actually still good. But of course, when that happened, right, when the cheap people see that, wow, you lost, that's why the price actually got affected. Okay, so this year they of course don't have that impairment, and you do expect, okay, the profit go back up to quite the standard level. Okay, let me just try to. One thing is quite interesting. Okay, they actually talk about profit guidance. I always thought profit guidance is actually bad. In fact, that's not true. Okay, in this case, they give a profit guidance. If you actually read in detail, what they say is they're actually going to expect a profit compared to a loss in the previous year. So even though you have a profit guidance, doesn't mean it's bad. In this case, it's good because last year they have lost, this year they're actually going to make profit. Okay, Ascot is just basically a recovery hotel industry. Things will only get better for companies like Ascot Genting because last year was really worse, was really very shitty for them. I think can get better. So is it time to actually play recovery story now? Later you will decide. TalkMed. Okay, TalkMed is a company that is quite focused a bit on medical tourism. If I'm not wrong, they have quite a bit of customer from Indonesia, which was affected last year. Okay, I believe they'll be slowly coming back. And of course, the question here is this: is it too early to play this story? Okay, you will actually talk about growth business. So of course, this I actually did a top down. So when we talk about growth, I actually highlight 3 areas. One is healthcare, tech, and of course renewable clean energy. So these are the 3 growth areas that I personally has identified for myself. Okay, growth business for Raffles Medical. And you can see that the company is slowly creeping up. And of course, same thing, what I did here is this: I actually went to look at their results. Full year result is out. And you can see that the profit is actually increasing. Okay, if you have been following Raffles Medical story, so last 2 to 3 years, last 2 years, in fact, they have been very aggressive into China. They just start up their hospital in China. So of course, the initial phase to start up healthcare in China is actually difficult. It may suggest that they are slowly, reaping their investment returns. Okay, Riverstone and MedTech. So of course, these are companies who have really churned quite a bit over the last year, if you have been following the story. So by the way, MedTech, if I'm not wrong, is one of the champion for last year SGX stocks. If you actually look at MedTech. Okay, if you have bought like, I don't know, 5 cents, that was March last year, you'll be laughing your way to the bank, man. The highest was 185. From like 5 cents to how many times? I think I calculated easily about 1000% or whatever. Okay, even though MedTech has actually rise up so much, why actually still in my watch? Because you can see the PE is actually still quite decent, 11 times. Whereas Riverstone is, for me, is purely from a business perspective, because in fact my valuation is actually for tech companies. To be very frank, I think for those who know me, I'm not really a techie person. So how I actually choose all this, I actually base it on certain hard criteria. I actually rank them based on market cap. Okay, I go for PE less than 20, and they must be negative net debt. Again, what is this negative net debt? Let me just explain again. So let's say we look at venture. Okay, negative net debt. So if you mouse over, they have the explanation. Sum of all short-term debt, notes payable, long-term debt, and preferred equity minus the total cash. Okay, you take your debt minus the cash. So if let's say this is negative, that means you have more cash than all your debts. which shows that the company is actually in a very healthy how I actually pick up this company, what I did was this. I went to the stock screener. I look for select sector. I look for technological equipment. Okay, that's what I did. I rank them based on market cap. And as long as their P is 20, I will go in, and if let's say, for example, their net debt is negative, yeah, it will be in my list. So this is what is actually being factored out, the venture, AEM, UMS, and Valuetronics. So of course, I believe, yes, tech has run up quite a bit, and I believe there's still room to grow. Generally speaking, we talk about all the AI, talk about all the automation. So all this is part of the value chain. So this for company, venture, AEM, UMS, Valuetronics. And the last group is Renewal Clean Energy. This one is definitely the most in thing right now. Okay, people are talking about it. I think even the US President Biden, he has actually made quite a huge commitment talking about how you grow this area. We all know that the world is suffering. We can no longer pollute the world anymore. So this is up and coming. So under this sector, the three companies that I found is actually Sembcorp, Capital Corp. Okay, Baostate may not be direct, but they are actually into industrial real estate. Okay, maybe I'll just go to Baostate to learn a bit more about this company. In industrial real estate. So like, for example, you can read here, they are for energy-related engineering, water, wastewater engineering, industrial real estate solutions. So they may not be direct into clean energy, but they are indirectly in terms of the real estate perspective.